Hello, it's Adil Fazal, market analyst at CFDs.com. Be sure to visit the website and trading firm www.cfds.com for your trading needs. You can certainly explore their products and services and certainly qualify for the potential 25% cash bonus offer. Alternatively, visit the educational site to certainly learn more. Okay, now let's try and assess this damage, folks. I've just been stopped out twice on my trades, languishing. On the buy side, I'm a bruised bull today. I'm trying to decipher exactly what's happening here. Okay, so European indices analysis, end of day. Let's begin. Okay, so summation. The title of this video is going to be Lambs to the Slaughter. Okay, that's probably the best way of explaining it. The FTSE down almost 200 odd points, is currently languishing at 5,600, so down another 70 points, so down almost 4% today. The German DAX languishing at 9,400, down another 120 points, now at down almost 400 points. Okay, so and the French CAC as well, butchered and bruised. Okay, so how do we react? How do we interpret this market? Let's see what's happening. Okay, I will still remain on the bullish side, and I explain the reason why. Obviously, the market sold off quite substantially, and it's very hard to continue to be a bear when the market's obviously corrected almost 21%. Regardless, I'm a day trader. It doesn't really make a difference. But from my perspective, you have, especially with regards to the FTSE 100, you have Mr. Carney and his dumbish comments about no rate increases this year at all. And the obviously the sell-off in the equity market basically will force the Fed's hand as well. And this market now, especially the equity market now, is in a perfect buying opportunity. Okay, now let's try and assess exactly what's happened in terms of the last video that I made today. The reason why I'm a buyer or bullish on the FTSE is because you've got stronger employment data. You have the Shanghai only down -1% compared to the rest of its peers. And also, obviously, given the fact that Mr. Carney is certainly dovish. So, those three factors added together certainly help the FTSE and propel the FTSE higher. Now, the only argument against the FTSE is the fact that oil prices certainly are remaining weak and continue to be weak. As you can see in the 10-minute chart, we continue to make lower lows and lower highs on the price of crude. Also, with regards to Brent certainly has broken below that key support at 28, which is a concern for now, and certainly has failed to hold that potential double bottom scenario. So we are in the verge of making new lows, and the sell-off continues. So again, that is a concern. But to a large extent, a lot of that is all priced in now. If we bring up the chart of the FTSE 100, bear with me. On the monthly chart, this is something that I was discussing with subscribers just now. The monthly chart now is slam dunk into the 200 MA, and you have a horizontal support as well. So the 200 MA on the monthly chart will certainly be a solid support zone. The weekly chart has support here at 5610. Okay, solid support on the FTSE 100. Certainly a level that will need to be respected. The daily chart certainly remains weak. Obviously, we've broken down and through those support zones, so that's not exactly a healthy sign from a day trading perspective or even a swing trading perspective. But given the fact that we did start to see some support being built and the market starting to show some strength, and given the fact that you are looking at resistance here at 5775, and then obviously you've got resistance at 5850. It's amazing how the FTSE has fallen from the pivot high yesterday at the pivot high yesterday of 5900 plus, now down at 5600. Amazing, absolutely amazing. Okay, but that's the market for you folks. Okay, you have to react accordingly and adjust yourself in terms of trading. But this has been one hell of a sell-off. Very impressive. I mean, we've had the flash crash before. I mean, this is almost equivalent to that. I mean, we've got the Dow, I think, down almost 500 to 600 points. But not only that, the FTSE, I mean, it's truly amazing how it was at 5,900 yesterday, now currently languishing at 5,600. So down almost 300 points. That's not a normal market. Okay, well, we have to adjust accordingly. I'm glad I'm positive for this week. I mean, it's still a very tough market, to trade. Okay, let's continue. 10-minute chart. If you are going to move higher, then you have previous support equals resistance at 5870, and then obviously you have resistance here at 5740 and 685, 690. Okay, now again the support zone at 5640 held, but given the fact that after hours markets are obviously plunged even further, and this is certainly looking exceptionally weak. Now we had the weekly chart of the S&P 500 at support. Now obviously we are now testing that support zone, so again this is going to be absolutely crucial here. If the market continues to fall, then the S&P is looking at testing that 1780 level, which is a 200 MA, and that will certainly come into play as well. So we shall see how this market ends. How it ends will dictate the next move. Okay, so again, very interesting. Okay, that's the FTSE 100 for you. Bear that in mind, folks. 5610 is your 200 MA on the monthly chart, and therefore you are looking at a potential bounce. Now, you have the Euro stocks. Let's just bring up the chart of the Euro stocks. Let's see how and where that finished. Now, the weekly chart of the Euro stocks obviously is into support. I've already explained that you had an unfilled gap here at 2870. Obviously, that was an unfilled gap, and then we were expecting a bounce from there. Daily chart certainly held that support zone. Okay, the 60-minute chart, you have this falling channel. You are looking at potential support on the lower diagonal trend line, and you did have some bullish price action as well. We started to bounce from that 2650 zone, and the market was certainly looking very promising. 10-minute chart, you can see that we did make a new low, which was quite concerning, but the diagonal trend line certainly came into play, and certainly helped the market move higher. So we are now looking at breaking out of lower lows and lower highs, and looking at potentially closing the gap above. Okay, so again, bear that in mind. The weekly chart certainly is into major support on the Euro stocks, and it's a gap that's been closed. Again, that's usually a good potent rally. It will provide a good potent rally. The Euro S&P 350 daily chart certainly has broken, is in no man's land, but the weekly chart, as you can see here, folks, is into horizontal support, so therefore hard to argue for further downside. Stock 600, again, is another indices that I use to cross verify. You look at the weekly chart here, again, we're into that 200 MA, and we're into horizontal support, so it's certainly hard to argue again for further downside. Okay, now the actual German DAX. Now let's just see how the German DAX is faring. Now the daily chart has held that support level, so you have to respect that. Okay, although the actual market after hours is now trading at 9260, which is a real concern. It's the main focus on is where the German DAX finishes tomorrow. That's the main concern, and that will be our main focus from my perspective. Okay, so again, diagonal trend line support, looking at the market potentially breaking higher from here. 10 minutes certainly putting a potential double bottom on the German DAX, although after hours we are now trading at 9260, which again is a cause for concern. Okay, something again to certainly understand and comprehend as well. Now you have the unfilled gap at 9960 above. Given the fact that we 9650, sorry, given the fact that we did actually hold support at 9320, is a positive sign, and we are looking at a potential move higher. So bear that in mind. Okay, looking for a potential epic short squeeze here on the actual markets themselves. We had an increase in volume on the buy side, so certainly a healthy rally will ensue, and that's what's expected. Okay, German DAX certainly looking healthy. Now the MDAX is on the weekly chart, on the daily chart, sorry, or should we say, is certainly into potential support now, so bear that in mind. Okay, looking at the tech as well, all share again into gap fill support, certainly is holding, and therefore looking for a rally in the German DAX. Volatility index and the CAC certainly into resistance, and therefore that would want to presume that you are looking for a potential rally here. Looking at your daily chart of the French CAC, you have this downward sloping diagonal trend line that's coming into play. Looking at the weekly chart, you're a slam dunk into the 200 MA and horizontal support, so it's very hard to argue for further downside. That's my opinion, hence the reason why I maintain my bullish bias on this market. Okay, so 60-minute chart, no real trend line of support really. Only thing that we can do is take the pivot low from here, connect it together, and you have the unfilled gap above. Again, weekly chart and the larger time frames will be the focus. Looking at the CAC mid and small on the daily chart, you can see that we are into potential support. Looking at the CAC mid 60, again you're into support. So again, the French CAC certainly is into support. Now, the Euro USD, given the fact that we're looking at European indices here, obviously we know that it held at resistance at 1.0960. and therefore that will obviously help European equities. So again, it's a barometer of risk, and that's holding, and therefore that should be positive for European equities. Looking at the actual FTSE, which we've discussed, you can look at the actual sectors as well whilst we're at it. Let's bring up the chart of the automobile sector. You can see that we're retesting that double bottom low. We're back into that 200 MA, and the automobile sector certainly is into support. Bringing up the weekly chart of the banking sector in Germany, you had support in this region here, and that's the area that we are looking to potentially bounce from on the weekly chart. Retail sector, we can certainly observe as well, bringing up the weekly chart, given the fact that this market has been absolutely annihilated. Okay, you are looking at potential support in this zone. So again, into a support zone on the retail sector as well. Hence the reason why it's hard to argue for further downside. The other important factor as well is the Aussie. The Aussie is very interesting here. So the looking at your 60-minute chart, you are making a base. If the market was so bearish, why is the Aussie not moving lower? That's the question you need to ask yourself, and that's certainly telling you that risk is certainly being embraced. Also bring up the chart of Kiwi, although Kiwi, the argument against the Kiwi is the fact that obviously we had weaker inflation numbers overnight, and that certainly hurt the actual sentiment in the market itself. But for now, we have to leave that as it is, and you are looking at a potential bounce from my understanding and my perspective. Okay, and also bear in mind that Shanghai has held double bottom, so why this market is overtly bearish is still very, very baffling. Okay, looking at the weekly chart now, folks. Weekly chart of the FTSE 250, even with a weaker sterling, the FTSE 250 is failing to rally. It certainly is a victim of the global downturn in sentiment and risk, etc. But again, some food for thought, okay, for the FTSE 250. Certainly is in no man's land, and there's a strong argument that it could potentially even fall further. So for now, keep an open mind, try and stay neutral. All the support, like I said, all the support zones that are supposed to be holding are not at present, because the market is certainly very, very bearish. But I am looking for a potential rally still, like I said, with regards to the FTSE 100. It certainly is looking very, very promising. Okay, the actual commodity ETF at the moment, still no signs of life, although the 60-minute chart is showing oversold. The daily chart certainly does remain weak and is in no man's land. Given the fact that the Aussie and Kiwi are holding, given the fact that the S&P 500 is in support, I am looking for a potential bounce. Now, the Nasdaq, if I bring up the daily chart, the Nasdaq, we certainly seem to be holding that gap fill support zone, although we have dipped below short temporarily, and we are looking to potentially build a base here and potentially rally as well. So that is going to be interesting in the next 24 hours, okay? Understood. Okay, so let's bring up the chart of the Eurobond. The Eurobond is an interesting chart at this moment in the current juncture, because you have broken the previous resistance. Okay, given the fact obviously bonds are a safe haven and so on and so forth, that should send the yields of euro lower. Then this is a warning sign. Okay, certainly is a warning sign that the euro is potentially on the verge of collapsing, which obviously will inflate the actual QE trade, or more QE is expected. So therefore, you are looking to break the potential top on this Eurobond chart, make new highs, and that would obviously send the euro to new lows, and that may well be the trade of the potential February or potential month, because you are looking at a weaker euro. Okay, so that's the interpretation, and that's the expectation thus far. Okay, certainly take that into consideration. Now, how do we trade? The emphasis is all on oil, okay? And given the fact that the oil markets are now extremely oversold, given the fact that the FTSE itself has corrected almost 20%, it's very hard for someone to attempt to now take a bearish position, because all the bearish news has certainly been factored in, and it's hard to justify the market certainly falling further. So it is a conundrum. It is a real conundrum right now. Now let's bring up the chart of the FTSE 100 or FTSE analysis. So multiple charts of the indices of FTSE, so bear with me. Here we go. Because all eyes are on the FTSE, because if the FTSE starts to stabilize, then global markets can stabilize. Okay, right. Let's just bring up the individual sectors of the FTSE itself. Okay, now the volatility index is actually quite important as well, folks. Bear in mind the FTSE volatility is just like the VIX in the US, basically measures the fear gauge, okay, and basically it's showing you that you are looking at a double top on the FTSE. Double top FTSE volatility index generally bodes well. for the it obviously trades in versus the FTSE, and therefore if the fear factor is now coming to an end, you are looking at a potential rally in the FTSE, and there hence the reason why I've taken my long position at 5609 and expecting higher prices. Okay. FTSE All Share, let's just bring up a weekly chart of this actual index itself. And yes, you are in no man's land. The market certainly is extremely bearish, but you do have previous resistance equals support in this zone. So these two zones are very, very important. Your horizontal support, previous resistance equals support on the FTSE All Share. Therefore, you are looking for a potential rally. Bringing up the weekly chart of the FTSE Europe top 100. Again, you are into horizontal support. So therefore, one would argue you're looking for a potential bounce. Can you see why I would neglect to be in the bearish camp? I want to remain in the bullish camp. Okay, and hence the reason why I have been buying dips all day long. Even though on certain trades I've been stopped out, other trades have actually hit target or almost hit target. Okay, and the trend certainly I've certainly been fighting the trend today. That I'll agree, but it's very hard for me to justify any further moves down. Okay, I would like to remain and be firmly in the bearish camp, or the bullish camp, should I say. Now the FTSE 250 certainly is in the bearish camp, as you can see here. Certainly is breaking support, but we do have support just down below, and this area or this zone will be quite important. Okay, now the dollar index, like I've already discussed, is certainly potentially topping out now, looking for a new low, and that should obviously help the actual FTSE move higher, given the fact that commodities are potentially going to base. Copper certainly remains bullish. You have made a base, so you are looking to make a base here. Gold certainly is a bullish move today, and that should help the mining sector to a large extent, or the mining stocks. Now going over to the oil and gas sector, this is the important index, and this is something that we have to observe. As you can see, we are making a new low as we continue. Lower lows, lower highs, but you do have diagonal trend line support that should come into play. Okay, bear with me 1 second whilst I just send out a message on my trades. Okay. Right, okay, so this is going to be very interesting as to which way this market will move. Okay, right. In terms of the next move in this market, okay, so this is interesting. This very, very interesting. Okay, very, very interesting. Okay, so the actual index here, which is the oil and gas diagonal trend line support, although the trend certainly remains exceptionally weak. Mining stocks, even with a move in gold, it still fails to potentially have attempt to garnish any type of rebound thus far. Oh, interesting. Interesting. Okay, so certainly in the weekly chart, the mining sector certainly is remaining bearish, lower lows and lower highs. Okay, and it is a counter trend trade if you are to go long, so bear that in mind. This is going to be quite important in terms of the next move in this market. Okay, bringing up the chart of retail, which is obviously crucial. And as you can see here, the damage on the daily charts are absolutely phenomenal. Again, this is a zone that you are looking to potentially move higher. If this fails, obviously, then you will have further support below. But again, a zone that you'd like to cover. Weekly chart on the FTSE 100 banking sector. As you can see, the Italian banks certainly have hurt the FTSE to a large extent. But again, this is a zone in which you would like to cover. It's not it's not a place that you would like to obviously looking to add further shorts to. It's a sector that certainly is oversold severely, and now looking to potentially bounce and move higher. Okay, so again, certainly something, food for thought. Okay, in terms of the actual market moves, very, very important here. The pharmaceutical biotechs, again, you are looking at potential support, hence a reason why your bias would remain long. Telecoms, again, into support, hence a reason why your bias would remain long. So these are all factors that we need to consider. Beverages, again, into support, your bias would remain long. Insurance sector, again, potentially into support, bias would remain long. And one of the biggest arguments, like I said, is the fact that the Shanghai itself is actually bullish, is actually into double bottom support. So therefore, it will be hard to argue that the market would certainly be bearish. So from my perspective, European markets, I am expecting a move higher, especially in European equities, given the QE factor and the Draghi put. And I would certainly continue to be a buyer of the dips. Okay, folks, I think that's a market wrap. Be sure to visit cfds.com for your trading needs. Cool.